welcome to the Breakfast Club. My name is Darren Hancock, and here we are on Thursday, the 4th of February, 2026. I hope you guys have had a great week. It's been fun. I've had a good time in here this week. We're reading the price for you. Looks like we've got another downward run. I'm going to move this to a break even plus a little bit now. I could still see this run back up into that 3 hour box, but I'm going to try and do Mark's 3 for 3 this week. I'm going to try his 3 for 3 out. The edge or the border of that is sitting right here. This box here. So you roll through it, come back into it, you can tag it right around the consequent encroachment point, and then roll over and come back, touch the edge of it here, go lower, just waiting for that confirmation that we got a break in structure here. We got a break in structure, gapped up, so I took it short there. Ideally, you want to take it here, or the best place is back at that consequent encroachment of that 3 hour, if you're awake through London to see it. I've got the 6 a.m. Ab says 6 a.m. If you guys aren't using that, you need to. Okay, that's out. Changing direction. So we could come back up, sweep this one more time. I'm just worried that if we trade through that consequent encroachment again of that 3 hour on a 5, according to the rule, on the 5-minute chart or 15-minute chart. Let's put this indicator. So we're just basically sitting inside this range now. So we'll wait and see. We got 7. We got another little run for 9:30 open yet. So we've come back and retested this low. So if it rolls over through here, I'm looking for a continuation. Get back in sync with that. Higher time frame. I want to see that pump up just a little bit higher now. We can get all the way up in here. That 6 a.m. would be nice. That would put us right. No, that would put us through there. I want to see it come back a bit more. Let me just see where we're all at here. Are we live? Stand by. We are live. They're right there. Who's first through the door this morning? Indeed. Thumbs up. Thank you for the thumbs up already, you guys. Wow. Morning, Hans, Russell, Abs. Morning, guys. So this consolidation, if we had displacement candle, fair value gap, pop back in an hour or so or two, like if we just see this drop down here, stop, freeze, and then the 9 to 10 candle just makes a small one, and then 10 runs up, tags the low, and starts going lower, gives us an institutional order flow entry drill at 10 o'clock off this candle. We just want to see if this one drops down a bit more, and then we get our little displacement. That'll be our displacement candle. But I'd like to see us get back into this no-go zone again. The problem is we traded through it, back into it. Now we're back through it again. So you got to wait for some structure break here now, because we're kind of waffling on both sides of it, right? Let's get a good push down. Right here would be nice at 318. I like to see us around 318s. Morning, Fuzzy. Okay, so instead of just sitting here staring at this, I gotta wait a little bit anyway. So let's go over to NQ. It's 15 minute. It's not giving us any break. It's interesting. What does the hour look like? Look at all the gaps and stuff that's hanging below us here. That's insane. No, it's not right. Is there a line in here? Yeah, delete this. That's better. I thought, holy smokes, we got a lot of tight little new week opening gaps and stuff there. So there's their consolidation. They're more bullish in ES than we are. So be careful here. This might be just a run on liquidity below the market and then send it higher, right? These guys are already in that. We haven't made new lows. And now we've broken the premium to the upside. And now we're coming back through the premium, watching where this candle ends in the next 2 minutes. If we end inside here, you got to hold off right now because ES is going bullish and NQ is going bearish. So you've got a divergence going on there. So you got to wait and see who's going to pull who where. Light crude. Change direction here. Here's your breakdown through the imbalance. This whole thing is a suspension block. So you drop through it, come back inside it, go lower, and you're nowhere near 50% of that. Selling a premium for a discount. You're in a discount zone here. So oil's looking that's a weekly chart. Jeepers creepers. No wonder it's not looking down. Let's go to a 4 hour here. Rejection block. We've finally broke the first little discount. Busy here. Or not discount. The first busy, we've broken it. We've come back inside it. Little wick through it. Retag this mitigation block here. And then we're looking to run back into this consolidation, I guess, in a 4 hour. 15 minute. Body breaks it, trades back into it, goes lower. Takes out this guy. I'd like to see this come back into here. On the 15-minute chart, see if it comes back into this 63.24. Let's take 63.24. See if we can get it right back in there. Soybeans. No body broke the high yet. We can get some support here, get back through this, find some support on top. That becomes our bull trap for run to the next premium, and that'll be a nice little run higher there. That might actually be worth some contracts. Got to get through these bull traps here before you consider anything in sugar, live cattle. Talk about a switch up there. Hey, look at that. Closed through it here, came back in, dropped down to the rejection block, and then blasted straight back up. And then back down again. 2 hours just switching you up. And didn't even end as a wick. That's just like straight up, giving you the impression we're going higher, right? So you want to see it trade back into here and then go higher. It does. So you're expecting that next candle to go higher, and it went down, took out lows again. That's totally not what you'd want to see. That's very frustrating. Those two candles right there, that one there and that one there are very frustrating. That's enough to throw you off and go, okay, I'm done. I'm out. I gotta wait for something. I return back into this mean threshold of that candle. Look at that, right back into the mean threshold on the tick, and then it leaves. That's enough to throw people off there. Would have thrown me out all the hell for sure. So we've come back to that weekly level on bonds, the bond market. And now I want to see if we can stay above here and use this candle here as a support to keep pushing higher for bonds. Gold. Really tight, small little ranges. Just trade these small ranges if you're looking at gold. I wouldn't get too excited about there being some huge breakout in gold again. It can just switch up on you, come back against you real quick. So just trade these small little ranges that you see. Just trade internal. That's just my opinion. Internal range liquidity hunt. So here, 2 minutes ago, for a run to here. So you're just looking for this right now. Those are the two downside boxes right now. Your upside box is right here. We just tagged it there, so that'll be a box-to-box trade. And you can nibble out some relatively decent change here. So keep your eye on this old bull trap and this old bull trap here. We can get through the mean threshold. You're definitely running for that guy. Silver. It's just about to hit that one now. Silver's doing its slow march up from that $70 range again back here. That's a nice little run up. Notice we didn't take the high, so you look for this to get retested. It still gets retested, sends it higher. That's a nice little run. So it's got some upside objectives here at 92.60, 93. We can get all this out of here now. That's that nice, look at that play off of there yesterday. That mean threshold, look at that, how it held. That's the kind of stuff you got to watch and observe, because it's so beautiful when you see it happen. So you start targeting there at one on the 1 hour chart, that mean threshold there. You start targeting and looking for a long here. So you're looking for any opportunity at that point at $75 to see a long. And if you can get through our premium box here and then use it right there as support to go higher, you can add more on and send it higher. And those are like classic 4 models I've tried to teach you guys every day. It's 4 models, man. It's all you need. And what do we have? I think we worked it out the other day that we have like 12 different models we can use. But basically 4 of them is all I need. Yes, somebody was asking me yesterday, you know, were you only trading futures? Now, I want to make one thing clear to you guys. We're not trading futures. We're not trading anything. We are studying price action. The futures market is just a visual example of us studying price action. Whatever chart you're on, whether it be Forex, gold, like commodities, banks, whatever you're on, it's exactly the same. And if you don't buy that, then you're wasting your time with this, because it's algorithmically driven. So everything that I show you, and that's why I try to show you a whole diverse network of options, different types of trading options here. Not options, but, you know, a cluster of different asset classes. And I'm trying to show you that it's available to you on every asset class because it's algorithmically driven. And all those assets all have CEOs. They all have fundamentals. They all have all those fancy things people look for. And yet you've never seen me mention anything about fundamentals. Nothing. So pure technical analysis, that's all we do here. And if you don't buy into technical analysis and you're a fundamentals person, this isn't the place for you. This isn't the place for you. You're going to get frustrated here. So anyway, what we'll show you on the futures market is the same thing on NASDAQ. Exact same thing. Okay. Here's British pound. Just simply look for a reversal, right? There's an opportunity right here. You see it? Your stop loss goes above the high. It runs you. As soon as it starts running me out here, I wouldn't be in that anyway. I would have found a way for my fail safe to get me out of that. If it closed above, come back and tag you out. You wait. Goes up higher. You want to see it. Don't want to see it close through the mean threshold. It does. Hits the rejection block. Turns and comes lower. So chop, chop, chop. Fail safe. Got you out at break even. You wait for it to break through again. It breaks through again, takes out this low. You think we have a body that takes the low. Good. And we have this BISI sitting right here. Trades all the way back inside the BISI, inside the little breaker that takes out this little high here. And then trades lower. That's exactly what we do every morning. You see this change in direction after taking out a low, trades up through it, body comes into it, respects it, doesn't take out the low. As soon as it takes the high, you pay yourself. Wait for the next reversal. Now we've got a body above this bull trap. Now you want to see that bull trap hold price and send it higher now. If you lose the mean threshold of that, look for a revisiting of this down here. And if we lose that on the downside, it now becomes the go no-go zone for a continuation on the downside. And if you break back through the no-go zone, then you've got a too small a range, so you wait for, that's it. Rinse and repeat, man, over and over again. So that's euro or British pound. So notice how the euro dollar, it's heavier, right, against the pound. The pound has found support to go higher. The euro has not found support to go higher. See how its bull trap, this one here, has not been broken. So this has been broken, that hasn't, so it's heavier, right? So it wants to keep coming lower. So unless this starts to really take off to drag this one higher, we should see this kind of hanging around while this takes a run. Then it should go into consolidation while this one helps to catch back up again. So we're seeing euro make a surge forward now. This is 4 hours. Let's go to a 1 hour chart here and see what we got. This candle here, you don't want to see the mean threshold get traded through. It does. You trade back into it, run lower. You actually take out the downside. So now you'd want to see a range extension. So here's the small range you've got here. It extends down. That's it, and snaps back into that go no go zone. Runs right through it. Wait for us to take out the high on a close. Right there. Tags it. Runs higher, takes the high, pay yourself. You see a reverse happening here. Wait, it trades through it. Now you're on a change in direction, right? Wait for the low, and you're aiming between here and here. You've traded back up into that. That's your box to box. Now I'm expecting to see this come right down into here. And look, right, it's just about to tag it right now. That's a box to box trade, and that's 2 hours. No different. So that's all I've got to say about that. Bitcoin is on a turn. Look for a retest here. There's your retest right there. Send it higher. Here's the next bull trap you have to work through. See how we had a body close above the high? We've come back, retested it perfectly here, looking for a run higher. So I'm looking for this bull trap to let go. If that one lets go, and you can get back up on top of that, you'll find some support, and hopefully you just drive straight through the next one and run that higher. Pull your fib tool from here to here. There's 50%. Pay yourself at 50%. Look for 62 and that whole So if you're using as soon as it hits that there, your stop loss, which is sitting down in here, take off half your trade there and move your stop loss to break even. Because you're right inside this guy anyway. So right in the mean threshold, take your pay there. So take some off there, move your stop loss to break even. You don't want to see it come back and retest this now. You just want to see it leave. Because if it just hits 50% or just wicks over that and the bull trap holds, you wish you would have paid yourself there. Just get money in your pocket, man. Mr. Dax. How lovely is that? It broke the low, trade back into it. I want to see it go lower. It goes lower. Inside this range here, you're looking at 50% easily there. Take profit model 1. Tell me take profit model 1 is not a super reliable one. See how we traded through, come back into the little breaker here. It takes out its own high here and then runs lower. Hits 50%, take half your trade off, pay yourself. Move your stop loss above the bull trap. It comes up, takes you out, you're out of your trade. Comes all the way back up, revisits it again. You can enter that one all over again. Go change in direction, rips all the way through it, come back into that, go short there. Targeting rejection block, old lows. And run deeper now, looking for 62%. There's lots of gaps down there, so I'd say down on the DAX. Unless it switches up on you quick. That's why you pay yourself, because we're in a market now that it can turn on you on a dime. Look at this. Citigroup. Gary's sitting there right now just smirking to himself saying, I told you it wasn't going lower. And that's the mean threshold right there. It hung out there, desperately tried to get up there, and all of a sudden it woke up and went, hey, look, let's just gap up above it. Instead of trying to drill through it, let's just walk around and get up here. This is just too messy. It literally came down. So now we're stuck between here and this mean threshold. Still not bullish for me yet until you get back above 119. If you can close above that box and go higher, I'm all for it. Otherwise, I'm still bearish. But you're inside this candle now. I thought that was going to be bearish from there. At least come down to a rejection block. Well, we've hit the rejection block on that candle there. But I was looking for that to go lower, and it's not. So get above here, I'm back to bullish. All these banks just suddenly decided, no, we're not going any lower. See this candle right here? So we traded through it. We closed below it. You want to come back, tag it right there, and see it go lower. And then all of a sudden, it woke up, shot through, took out your candle, your stop loss. If your stop loss was sitting right above that candle's high, it hit you, get back in sync, go higher. We've got to change in direction here, right? And this little bull trap, but it rips right through, actually opens right on the top of the bull trap, comes back down, tags the breaker, and then sends it higher. Got to be on your toes, man. This will rip you apart. I was so excited about gas. It just suddenly dropped $5. It's like, what are you doing? There's our Disney. Look at that. It pulls back and then suddenly rips down $9. $8. Drops $8. Gets below our watch line. We're looking for that to get down here. See how even Disney turned on our levels we're looking at here. Came back up and actually closed above the no-go zone. And then literally gapped below it. Not the kind of price action we're looking for. Okay. What's ES doing now? Is it finally rolling over? Wait for this market structure shift to occur on ES. Good morning, Jean-Paul. Mark. Lucky dog. Good morning. So we'll look at this another 8 minutes to go. We got sourdough bread making today. It's really, really choppy here. I just wanted to see us get back a little higher. Now I'm looking for us to at least get back into, well, we did right there. It tagged it right there and went lower. Right on the money. See this chop? That's not the kind of stuff you want to see. It clean, hit it, and leave. And this is where you get your face ripped off, right? Unless you're looking for that nice long there, then you go, woohoo! Move yourself to break even. You took the high, pay yourself. If it gets up into the rejection block, there's your premium sitting right up in here. So that would be a right there kind of situation. Bingo, hit it. Now wait for it to get up on top of that level. This is what I want to see. Let's see it get back up into here. This whole go, no go box. Get a little early. Stop loss is going to sit down here. This is, I want to see a significant run back up through here. Now this, got to get through this bull trap. Otherwise I've just put myself right on the mean threshold of that bull trap. I want to see this one hold and this little imbalance down here hold. Ideally that would have been a nice place to tag it. We get back to that line again. I'll put 3 more right there. That would have been the more ideal entry. See how it's right on that mean threshold of that candle? That's what you want to see hold. Now you don't want to see it come back through that level. Mind you, this is where you start second guessing yourself. There's too many overlapping arrays. You got this guy right here. We could come back and revisit that. We got this mean threshold here, and you don't want to see this all fill in. You want to see this act as a breakaway gap, and this to kind of be reinforced with an institutional order flow entry drill and start pushing higher. So if it breaks that high there, now I can move to that spot. No, Hadid, we want to see it come higher, then go lower. I missed it. Here I am telling you guys, pay yourself at the next high. I'll pay myself one there. So 1, 2, 3. If it takes all three of them, we're looking for a run here. Good, that's good enough for me. I'll leave that right there. We got a risk-free trade now. No reason to sweat it. We've come back into this candle. I want, like we did with this one, you want to see that leave. There we go. I'm going to let that sit up there. We're targeting right here. That's where my stop loss is going to, or my take profit is going to be. This is just an internal range liquidity. We've got the go no go zone right here. Shit balls. We'll take one off there. If we can get into the no go zone, I'll take one more off there. Right there. So I pay myself again there. That's the no go zone. That's what we're bouncing off right now. So if we do come back, we've paid ourselves on the way up. Let's look at that reaction off of that. And we're out. That's an internal range liquidity on. So if it goes higher, that's not what you judge what we just did. And literally came back and tagged me out. You see that? That's funny. But who cares? We paid ourselves on the way up. So that's the next up zone. If we can get through here, I'd like to see us reach for the premium box. That'll be a box to box trade. We're looking right here. I don't know if Hebert's in here or not. I think he's got to work today. See how you're right up here. If you're using your take profit model 1, right up into 75%. So if you would hit 50, 60, there's 70, and you're sitting at 62. See how we ran all the way up here? Hit 70, 75. You'd move that right up to 70, and then it would have come back and take you out right there. And then you're done. You would have taken 70% of that run on the internal range liquidity. And look at how quickly it's turning here. Aren't you grateful for, look at that. That is, holy crap. Poop on you. Look at that. Right into the, we traded back below here. Did we get below that level? Yes, we did. We closed below there. We come back inside it. And now we're smashing through it on the open. We didn't reach our premium. We hit the no-go zone. And look at there. There's a no-go for you. The rules, man, I tell you, they can save your ass. Even the objective that you want, didn't get it. They will save your ass. Morning, Pablo. Look at the 15-minute chart. Well, we both got what we wanted there, Hadi. It went higher. I wanted it to go a little higher than that, but high enough. Hit the rejection, the no-go zone. And look at this. Are you chasing this? Are you all jumping on this right now and chasing this? Is there a clean setup in there? No. If this runs, it runs. Runs without me anyway. And the urge is to cat this one, like a cat and mouse. You see that just diving down like that? You want to dive on that and you're like, I'm in the profit. Then it rips back against you. And then you say to yourself, why didn't I just wait for my setup? Because you're the cat chasing the little laser light on the wall and you have no discipline. So wait. Did you get in on this, Hadi? There's no setup here. There's no setup here. There's no setup off the bottom. It's just running. And that's the way it goes, folks. Sometimes you don't get in. Yeah, I know you're in Mark. I was in on your Mark 3 earlier. I thought I'm going to take Mark's Mark 3. And then that little retracement we had here, I think it was right here. I was in right off the bottom here. This little retracement, I was just like, nope. And then it came back, just tagged it again. Inside the consolidation, if you're looking at the consolidation cam model 2, here's your consolidation. Watch. If I go like this and I go equilibrium, it's hard to see. There's 50% right there. You don't even get, you get a cam model 2. So you get anything from here to the 50% cam 2. 1 is from wick to body. That's cam 1, cam 2. You don't want to see cam 2. It get taken out 50% above that. And it literally trades right back into it and slams it down. So cam model traders would have seen that one, if that's your area of expertise. Now, did we tag anything over here? No. $326 we're looking for. We're looking for a retest up here. We can get back into here, the bottom of your little Mark 3 there, and start running that down. That'd be sweet. And those of you who are chasing that because you saw the big bold candles going down, now you're getting squeezed. And all those numbers over there, they're panicking you right now. This is why you got, Michael was talking the other day about you really got to be disciplined. You don't get it'll just tear your face off if you're not disciplined in this kind of market, because it switches back and forth on you so quick. It's a full fill of that SIBI there. But that for me is not a trade setup. I want to see us come back to the new no-go zone right here. And that breaker. And those of you who were chasing that and it was getting down here and you started getting in here and now it's come back against you, coming back to a logical level we want to see right there. There's one. That's the low. I'll take one there. I'll take another one there. Now we're way above this. This is not a good sign. So stop loss will have, see how my orders are in, but they're still jerking me around. I can't do anything with it, right? So if that rips against me, I can't even get out of the trade because they haven't even put me in it. And they'll put me in it in 5-10 minutes from now. Which is a frustrating thing about TradingView. If this was a live account, I'd be pissed right now. Because they're just not putting the trade in on it, right? So that's ran all the way through to the premium. If that keeps running through, that'll put me way down in the hole when they finally put that trade on. So now all you got to look for is some redeeming drive right back up into a premium area here. Tagging this old consolidation again and driving it straight back through here. If we can get that in here and send that lower, then we're looking for, we've pretty much got in on Mark 3 here for a lower run. Now you don't want to see it break through the mean threshold of that, right, Mark? According to your rule, if that's your old Mark 3 right here. You don't want to see more than consequent encroachment of that. There's the first one finally going in. There's the second one finally going in. So we'll stick our stop loss above. Where's our mean threshold of that? I'm going to put this above here. That's a big run. Big loss if I take a loss today. I don't want to be above ABS's 6 a.m. candle. We come back up and tag that. I want to see that hold price and come lower. That'll be my line in the sand if we pop through that. That'll also put us above that consequent encroachment of the 3 a.m. candle. Yeah, those are the 3 a.m. candles there. These are the midpoints of overlapping 3 a.m. candles. We've got a change in direction here already. We've come back, retested it. This could go higher. See what we do today. get out of that. And once again, they're not letting me get out. Let's hopefully they'll take the order for where we try to get out of it here. They don't take it up here somewhere. This is just too choppy for me. It's sitting right in the middle of the range. I can argue both sides of this running up and down, and I'm sitting in the middle of the range, so it's not a powerful position to be in. So I'm bailing on that. We're right inside the breaker. We've ran the breaker out multiple times, and we ran to the premium. We've hit the discount. See how we're sitting right in the middle here? I'm not playing in that. So hopefully when they finally decide to read my order, that's frustrating for TradingView. We'll see what it takes out there on our see what it eventually takes out. Okay, let's look at ES. ES is still refusing to go lower. It's been through that. So you got a busy SIBI overlap. We've got to run lower. So you'd expect to see that upper portion of it hold price, right? And see how this wick's getting through here? Not clean. It's not clean, you guys. And trying to force a trade inside this market, you're just going to get beat. Look at that. That's nice right there, right off the mitigation block. I like to see that roll over here now and take out this candle here. That would be my downside target on that. Through it, to it. Premium. I'm not liking any of the markets moving. They're not crisp. They're certainly not clean, and the wicks are doing some serious damage. So if you're looking for precision in the markets, the wicks, it's loose, and the wicks are going to take you out and frustrate you. We can get back up on top of here. This would be nice to see this go higher. Look at that. Hit it. Get bouncing around between these two arrays. Got no-go zones. We talked about that. Run through, into them, and then left. Look at that. Short. That's why you gotta be careful. You have to be careful, man. The setups are there, but look how choppy that is. Oh, I gotta go. I'll be right back. But keep it, just kind of break this whole section down and you'll see why these levels were important and how they provided support and when it turned on you. Just kind of watch that. Trade of 8 down again. It's probably a good thing. This whole even trading view is not acting properly. Am I finally out of this trade? Finally, what did they give us on that? Minus 175. That's way too choppy for me, man. Look, it's still ripping back against you. That's just chewing people up there. And those who chase that going down, you're getting chewed up so bad in here right now. And you're living with some serious regret here now, chasing that, right? That's why you gotta wait. That's why you gotta wait. And then as soon as you see it chopping around, sawing back and forth like that, and this is clearly not loading the trades on quick enough. So for you to make a decision of when you're going to bail and when you're not, move your stop loss. You saw how long that took to get the trade in, and then to take it off, it took a long time as well. At least it's nice that they close it out right at the point where you say, I'm out, even if it's 10 minutes later. Anyway, see how this is refusing to go lower? That's really holding up NQ's desire to drive down lower, right? I want to see this. I still want to see us get back up in here. See how we have a change in direction after here, change in direction, then quickly rips back through it, uses that as a no-go zone and sends it lower. So from here on a 15-minute chart, this is bearish. It's bearish. ES, it's still kind of waffling around in here, but on a 15-minute chart in ES, it's bullish. See how we traded right through? We have this new change in direction here. Huge, ugly wick went all the way through and would have taken your stop loss out. Now it's finally traded back into the bottom of that SIBI, and now it's running higher. So that wick alone right there at 930 was enough to smash people out. If you had a stop loss sitting there pre-market open. You got to see it get through 6959 on a close. This immediate rebalance you see right here. You're between these two right now. So you want to see it close below 6946 and then start running out these lows, and then use this as a half that wick and that SIBI right here as support to go lower. It's choppy, man. Don't stay out of it. There's gold again. Here's a nice little change in direction. We got the bull trap broken to the upside. We've used the bull trap now to continue pushing higher. We're aiming for the next bull trap. If you're inside the range here, take profit model 1. I'll show you again how it will save your ass. You get in on 50%, so you catch that just below there. You run to 50, take out that high, pay yourself, move to break even. Goes to 60, take off another 10% there. 70%, move to 60. Hit 75%, you move to 70, you're out right there. Ding, ding, you're done. That's a small internal range liquidity hunt. You've got the lion's share of the portion out of the range. Now you wait. That's it. And that's the discipline you have to have. And you had 75% from just under 50. You got it at a discount. And that take profit model 1 scaled you out into some profit. And it got you risk-free real quick, so you're not stressing out over it. Anyway, I just want you to see that. It's a rinse and repeat every day, you guys. I'm not teaching you anything new. It's the same repetition every day. Oh, I agree, Mark. If it's a fractal setup, it should work on all time frames, all asset classes. I haven't figured. I know that the 3 is my 3 on time in a bottle. So it works on a 3-minute chart, but do you go from 1 hour to the next hour? So I think that's how we're going to look at it. That's part of the discussion. I don't know if you really want to have it here, but that was part of the discussion. I was thinking about, from a fractal nature, using time in a bottle. If I use the 3-minute candle on the hour to the 3-minute candle of the last hour, and look for those and just kind of line up the 3-minute candles, then the 3-hour candles, and then do that on the monthly chart. Third trading day of the month. How's that? I haven't back tested it yet, so that's just loose theory right now. So now you're looking for the mean threshold of this candle. If you've got one left on, there's no box-to-box trade here unless there's a little tiny imbalance in there, which I think there is. Yes, there is right there. That's the premium. If you're doing a box-to-box trade, there is no box-to-box. You went through it, and you have to wait for a market structure or this little shift to occur. That's the shift. Use the candle, send it up higher, aiming for premium box, hit it. Now you're waiting for this bull trap to let go. That reverses down, comes back down on you. You'll see the benefit of my take profit model 1. So I think that the 3M strategy should work. I'll test it out. Yeah, test it out. That's one of the discussions I wanted to have with you yesterday, Mark, is got some ideas for your Mark 3. And abs is 6 a.m. candle. I know you guys aren't using it much, But you go back through your charts and you look at the 6 a.m. candle and you'll go, holy crap, why do we keep ignoring that? 6 a.m. candle, ding, 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 off she goes. 6 a.m. candle, through it, ting, off of it, go lower. Through the next 6 a.m. candle, ting, off of it, go lower. It's a delicious, delicious candle, man. Now she's finally getting out of there. Don't chase it. How many of you chased that one already? Wait for something clean, and there's nothing clean in here. Sometimes you just got to watch this and you feel that anxiety in your chest, like your fear of missing out. And you have to acknowledge that. And then you have to say, I need to sit on the sidelines. Because I feel this cat patting the ground with my little paws, just ready to pounce, right? And that's not how you want to trade the market. Wait for something clean. And if things take off on you without you being in it, acknowledge that and acknowledge what's going on inside you. You know, a lot of people don't look at this market. You look at this market, you say, oh, this is crap. You can't trade this. No, but you can learn something else. You learn a lot about you when you watch this kind of stuff. When that was taken off there, put a big line right here like that to that candle, and then type in psychology here, and then type in the whole psychology, what you felt when that starts going on there and you weren't in that, and your overall bias was lower, and you were like, why didn't I get in on that? I felt this, I had this anxiety that I was missing out on it, and then I didn't feel so bad when it came back and squeezed the shit out of everybody. I wanted to chase it here, or I did get in here because I succumbed to my desire to chase something, and then it came all the way back and put me hugely in the hole. I saw it running back up there, and I thought, oh, it's going to take those highs now, and I'm done. And then also it went in the direction I wanted, so I had more anxiety because it went, I knew it was going that way. If I would have held it, that's the gambler's mentality. There was no logic. There was no clean setup in there. And I'm looking for a way to try and squeeze myself into a round hole. And I'm a square peg. Write it in there. It's a beautiful opportunity right now for you guys to study yourself. The market provides you with tons of opportunity to study yourself now. Look at that. Literally opens and closes right on the bottom of it and then sends it lower. And if you don't do that, Michael was right about journaling, man. You got to journal what's going on in your head. Morning, Derek. Did it finally give up the ghost? Yeah, look at that. Yes. NASDAQ dragged it down here. Now I want to see it come back and retag this low. Watch that close in the next 50 seconds. And then you want to see it come back right into 69.32. And for 69.32, so like right in here, we want to see it just come back and tag this bottom here. And your stop loss will have to sit above the bull trap. Here's your 10 o'clock news release. Bub. Oh, she's driving. Still nothing, man. Still no clean entry. We got a nice little drop down here. Now you're looking for a range extension model. Anything that trades back up inside this box here, this is your no-go zone. And this is kind of interesting because this tells you, and that's all kind of suspended as well, by the way. This is like a giant suspension block. And that's just too choppy, right? You see how we traded, oops, see how we traded through it right here? We were right back inside it and then sent it lower. That's the range extension model. Now you want to see it. This would have been nice to see it drop below that level, come back in and tag it, or at least run back into this candle's wick. And it didn't do that either. So again, nothing clean. And here's your fear of missing out again. And I should have caught that. Well, when you got beat up inside here, do you feel emotionally ready to engage in that? Can you shut yourself down and say, no, I'm just going to trade my model? Yes, NQ is dragging ES right to the floor here. We didn't get back into that level. So you got to think this may take an hour or so for us to get back into these lows. You may see a sweep up for 11 o'clock and then a reversal. So what I'm looking for here would be this kind of thing. If you see this, you see this drop, we're going to keep coming down here. Then you see this run back up into here, and then you see this big leg down. Oops. And that can run all the way up into here. So that would be the next price leg lower, whatever this is from here to here. And this leg hasn't finished running yet, but if that is the leg, then you're looking for that kind of thing. And then you're doing your scale out on the way down. Lets you take profit model 7 or 6. 7 is between 3 a.m. candles. So that's kind of like what I'd like to see, a retest of this, and then come back here. So that may take another 15 minutes. That may take half an hour, 45 minutes, whatever, but I want to see that retest. And then I'm looking for anywhere inside a 5 minute or a 1 minute for a reversal right at that candle's low. So looking for this down here. How's our Forex doing? There we go. There's our discount. Excuse me. That's our little discount level we're looking for it to tag, and we just tagged it now. Euro's busting out now. Pound is slowing down. Let's see if we see this Euro get back up above this level right here. I want to see this right up into here. That's the two extremes you're in right now. That's a box-to-box run right there. What did Bitcoin do? Did Bitcoin give us that the run? We went all the way up to 79%, 80%, retag this old low. change of direction. Bodies are inside. Ran through. Choppy, man. It's not clean. We have a market structure shift here. Body breaks below. We come back into it, which is what we're looking for over here in ES. The same kind of setup, right? So right now we're seeing this kind of thing coming down. We didn't see the return into this. We just saw these low candles coming down. So this is that, what I was just talked about in ES, the 15, 30, 45 minutes later. I want to see a retest of that. See what's going on there. This is what we're seeing here in Bitcoin. You see that? This right here. That's what I'm looking for, is a retest of this level right here in Bitcoin. Or sorry, in ES. That you're seeing here in Bitcoin. And then you want to see that next price leg down that I gave you here. I don't know, I just want to keep going back and forth to them so you can see them. That price leg lower, back to here, and then the next price leg lower. And then you're using the fib tool here as a method of scaling yourself out. Obviously you have to invert it and put your 79%, 80% down here instead of up there. It's going to be flipped. I'll flip it just so for clarity's sake. So that's what it should look like. So if you're scaling out, you hit 50% scale out, that should just take you out a new low, then 60 or 62%, so on and so forth. Okay. And that's what we're seeing here. That's exactly what I'm looking for over there. And then that big leg down. We got right up to the top of it. Get back up on top. You get back up on top of that, I'm all into bullish again. And that's only bullish until you get into here. Then you're really bullish if you can get a body above that. And look at that whole box that you have to allow that to come down. $10 or more. And to stop to go higher. We're seeing Disney come back into the lows here. Let's see if it rolls over here and comes back lower. Or it starts pushing through here and getting back into this Visi above you. So you've got from here all the way up to here. Oh, is ES coming? ES is coming. But see how it's a wick? I don't want to see a wick. I wanted to see a body stop there. And then the retracement back into there. Now we've got that level. Right there. Now I want to see if that holds. And now you look for any reversal in here. You look for a reversal for a continuation on the downside. So we have right there. I don't know why this is so dark. See how it switches back up on me? And I've tried to bring it forward. But it keeps on... visual order, bring to the front. And it looks all just a visual order, send it to the back. I'm trying to send everything to the back here. No. Anyway, we're inside this range here. I want to see this right here. Whole price. I don't know why that's well, that's the first presentation, sorry. Right here. That's the go, no go zone right there. We'll see it. We'll have a look at that. So we're back up inside that candle. It's good. Right into that little no-go zone right there. There's a little... No, we didn't quite hit it. No. We'll make it one more little drive up in here. On the 15-minute, I'm looking right here. There you go. Now you're in it. Now I want to see that pop off of there and start coming lower. Start coming down. If we work our way through that level, again, you're back to a potentially bullish run, and you're right inside this bull trap here. This is a small range. You've retraced quite far into that. We did not get an opportunity here. You did get an opportunity right there to tag that and send it higher into the bull trap or into the go-no-go zone, and you're right into the consequent encroachment of it. So I want to see that react off of here and start getting back below this candle. So if that's just the retracement we've been waiting for, then I want to see proof of that and a run below here, use this candle as support, and then get through that mean threshold. So I want to see this get broken to the downside, then I'll be more convinced that we have another run lower. If that makes any sense to you guys. See how it's chopping around there? Not acting the way I want it to act, so still not going to engage it. Now the tricky part is where it suddenly cleans up and you start to say, oh, look, now that's nice clean price entry. After it being all crappy, then it cleans up. Wait for the next one. Wait for the next entry. If it's cleaning up, then it'll go clean in the next one as well. I just saw your message there, Mark. I just sent you a message back. Sure. Sounds good. Sounds good to me. Watching that level right there. Yes, indeed. It's that consequent encroachment we keep bouncing off of on the daily. This is right in the, right, oh, sorry, that's the wrong one. Right there, 137. That's the mean threshold on the daily. And see how we literally pop above it, come back inside it, run back up inside this range again. 50, 62%. See how we run above this order block here, come back, tag it, send it higher, pay yourself at the high, and then it reverses again, goes into chop. So there was a clean moment there for a couple of trades, and then your internal range liquidity hunt, then it chops around right in the middle of the range. So what do you do there? There's no model for that, but sure, take profit model 1, I tell you, save your ass. Mark it out. You'll see again how take profit model 1. I'm going to make sure I flip it back the right way again. Take profit model 1. So here's your first reversal. Trade in there. You're going long here. Stop loss is sitting here. Looking for this 50% of the range, which is right at the top of the first bull trap. You hit it right there. Pay yourself. Move your stop loss to break even now. Take half your trade off. It makes it to 60%. Take another 10% off and move your stop loss right there to 50%. It ends right there, runs up, hits 70%, move your stop loss to 60, you're done. That trade is over. You've caught 70% of the run into the liquidity inside the run here. You got taken the rest of your trade. The last 30% of your trade was off at profit. And then all of a sudden it's reversing on you and you're going, ugh, I thought it was going to go for the new highs. I thought it was, you're one bridge too far, man. Those are all nice, clean data points, internal range liquidity. That's why that take profit model 1 is a great way to save your ass. And then if it comes back down into your level again, you can start the whole thing over again. I used to call it buffering. So not buffering, in other words, if it trades back against you, all the money that you were making in here is going to offset whatever losses you take here if you're convinced that you want to run up into this no-go zone again. This one's finally getting hit. See how we never got it before? Now you're getting it. Now I would like to see that turn and go back up higher for the next price leg into here. And that can come all the way down into here. So that would be the next price leg higher from here. That puts us right in the mean threshold of that candle. And if we go to the bottom of this, right there, if it comes to the bottom, then that puts us right inside that no-go zone. You see, this is like barbed wire fence, man. Do you want to play in that? You see how clean that is? It's not. When it's clean, you see that nice little tag and go, and then it just suddenly decided to go back into chop again, chopping around in here. It's still got specific data points it's doing, but it keeps just running back and forth. And if you're a skittish trader, you'll get out. For me, I get skittish when I see this kind of stuff and I don't see it clean. I go, I had 2 candles, 3 candles. I start freaking out and saying I'm out. I like price action to be nice and clean. Tag it and leave. And believe me, there are plenty of those days out there. So watch for that next level run up into here and above into the mean threshold of that candle. So bull trap is our next target. It's mean threshold, which is also the go no-go zone. Okay, so that was the retracement back into here. Now I want to see that next leg take it higher. And again, we're allowed all the way down to the bottom of this because this hasn't been hit. Now it's finally got tagged. So we could see, you know, consequent encroachment of that. Tag of this old high. It's open. They're all kind of overlapping points. We have equal lows. On these days, you should think about going up a time. Yes, that's a really good point, Mark. Really good point. When you see it chopping around like this, slow down your play in the market and slow it down to a 5-minute chart and say, how's that looking? Is that looking as choppy as the 1 minute? It doesn't. It looks a lot cleaner. You've still got some chop in here, but you know, if we can get a body above here, which is 246, then I say, all right, now we're back inside that range again. Are we at 50% of that range? You have to get in a discount in here, and then you start using your, like, it's 70% right on the top of that go no go zone. Coincidence, maybe? Anyway, very good idea, Mark. Just slow things down. When it's chopping around like that, slow it down, move to a next highest time frame that you're most comfortable with. So that's 5. We'll move that to 15 and this for an hour. Good advice, Mark. So important, and I agree. Messy charts on the 1 minute, stay clean and keep your money. We'll be back in half an hour. See you later, Hadid. ES is more bullish, so my choice was to buy ES rather than NQ. That's a nice little close above, tag, go higher, mean threshold. See how this NQ, we want to see it doing what ES has already done. We want to see this come down, tag it, and leave. Look how choppy that is. Finally hit that objective there. Now you want to see if it pops through here, which is what we're looking for on NQ to get back up above here, right? And then start using this candle here as support to start pushing through the next bull trap. That's nice. Goodbye there, Derek, if you bought that one. Not goodbye, Derek, but goodbye, Derek. Goodbye. So on our 1 minute chart again, oops, that's 15. This is 1. See how that little leg up higher? That one, I think the one we had here was up around that midpoint of this up close candle here, this last breaker. I want to see midpoint. Again, not acting really cleanly, but let's see if we can get on top of that, because ES is pulling us up, which is good. We have a wick through the high now of that range. Pay yourself a rejection block. Now I want to see this. See how we've broken through the go no-go zone? So it's a no-go. We're going for a long here. So you want to see it come back and just tag that. You got lots of equal highs above you here in the 5 minute chart. Come down, give that a little kiss, and we can do along there. And once again, this freaking thing is not okay. It's finally loaded me on. Take out that high and I'll just move to break even right away. I've only got 1 on, so. That's when I should be moving it. should be sitting right there. I moved that a little too quick. Too much color here. I couldn't see where my stop loss was. I was actually right up too tight. Should have moved it right into here. And then you watch. There's the mean threshold. Move your stop loss to the bottom of that candle now. Because that's hit the mean threshold. That can roll over and take you out. So that would be like, boop. Take me out right there. I'd be out there. So unless you're paying yourself at the mean threshold. Now we can see this come back, retest this one here. And all the way down to the mean threshold there. Come on right back into here. Just give us a little kiss back into that 50%. And then I'll go long again there. I don't know why it's so freaking murky there. If it takes out that high, I'll move to break even again. And you can take one off there. I'm going to give this right to this whole candle here. We could still come into 50% of it, and that's where I don't want to see it getting lower than that. One, two, if you get three of them, your ass is next. There's the full retest of the go, no go zone. If we can't start trading back through the no go zone, I'm on the wrong side of it. I'll close out. So stop loss will go right here next. As soon as that closes that candle, stop loss will go here. Now I don't want to see it get back below here. Should not be coming back down there. Now I got to wait for something cleaner to set up. So you get playing inside the chop, man. So this whole candle here, we've now run above it. Technically the stop loss goes down here, but I didn't want to see this get broken, and I didn't want to see this start getting wicked through. So that's demanding really tight price action in a choppy environment. See how the bodies are still respecting it? And my literally came to my stop loss and took me out. Good for you, Derek. Fishing in a stocked pond, yeah. ES is more bullish, so my choice is there. I think you suggested yesterday as well, next high. That's the way this Wednesday before NFP, next high. Don't look for runs. Now keep going higher. See how we haven't closed back through that level? I was way too tight with my stop there, but you know what? I'm okay with that. Demand what you want from the price, from the market. On ES, I had limited a limit below the equal lows in the 1 minute. Entered me at 10:18. 10:18. Oh, nice. Just below here, you had a limit. You entered in there. Nice. Did you pay yourself at the high there? And out at 10:21. 21 candle. Nice. That's a nice 18, 21. That's a time in a bottle there, man. You got the 18 swing and the 21 swing. Good for you. Banked another one. I'm fishing in a stock pond. See how we got through this level now? What we did, we had a run above the high. Reverse, traded back inside it right here. And even that closed above it. But right up into the last up close candle here. And now I want to see if it breaks through here and starts running back down to this discount box. So not a clean box to box trade. See how we've traded through that on a close? Not what you want to see. So we can forget that idea. So let's look at NQ now. NQ is right up inside that box we're looking for here, right to the tick. And now I want to see if it eats through this one on a close now to here at 195. That's 70% return. Look at that, right on the money. Option trade entry reversal. Right in the box we're pointing at on the 1 minute chart. Remember that 1 minute we're looking for? Right on the top of that. Look at that, right to the tick. And now we're looking for the rollover. It traded below it, trades back into it nice and clean. That's way cleaner than the ES one is. And now we're looking for this retest. Take these lows out here and retest this candle down here. That is way more cleaner, you guys. Not that I'm encouraging you to take that trade, because it's not it's not a fun trade. And the market's super tight on a 1 minute chart. So there it is. Test, test twice. Send it lower. No bodies got above there. That's all acceptable. Send it lower. We're looking for this mean threshold to get taken. It does on a close. And then you want to come back into that mean threshold. Hits it. Sends it to the rejection block. Rejection block. You want to see it get a break below here on a close. Come back. Test the low on that. All the way up to the mean threshold. And then start reaching for this one here. Those are the small little internal range data points you got to look for. If you overshoot your data points and you try to say, I'm reaching for way down here, and it gets it, and you wonder sometimes why it turns against you, you're missing all those really finite data points that you want to see support your trade. So there's the trade below. Now, if we continue to take out the next one, then we reach for the next trade. Don't worry about that one. Look for this one. Wait for this candle to finish. So if we do get another little pump back up, I'm looking for it to tag here all the way into the mean threshold. That mean threshold's already been done for me, so I'd like to see it just come back and tag the low, then roll over. We're already in the discount box already, so that's a box-to-box trade. Look for the mean threshold of this box, or the consequent encroachment, if you will. Right there. There's your box to box inside a small little range. We can make it look more sexy if I stretch it out. How's that? It's still 100 points. You know, 150 sitting right down here. And if you're at 156, 156 is sitting right here. That's 100 handles on a box to box. It's clean logic, man. You'll see it when it, but see how it's been so choppy here? Remember we said when it starts to clean up, that's a lot cleaner. Don't like the wick, but you know, whatever. It still meets our requirements. Oh, sneaky bastard. That is a little sucker right there. You see him? I didn't see him there. So you have to include that as well. That is the block. I missed that little piece there, so that's perfect. That's right inside there. My bad. If we would have just stuck with what I had there. And I didn't see that little piece there. That's why you have to stretch it out, man. There, now we've traded through it. Literally opened on it. That one's the close. So we want to say our next little box is down here. Our next discount D2 is right here. So now I want to see it close through that. And ES, what's ES? Responding in kind. Now Derek's like, oh, I'm so glad I got out of that 21 candle. That's just super killer, man. That's super chop. Super chop. Didn't break through it. We've got to close below this one. The high on this candle here is 15525. The close is 15500. So 0.25 below that. Run into it, run lower. Right there. It's only literally 0.25. So a quarter of a handle, or quarter of a tick, whatever you want to call that, is all that was for validation. Run back into the go, no go zone. The moment that tick hit below there, validates this is a no go zone. You hit it, and now we're looking for the next no go zone here. So wait 15 seconds, watch for a retest of this, and it can come all the way back up inside here. So keep your stop loss above, because this will be our little bull trap we want to see hold now. So wait. Where does it close? Yeah, I can't do anything about that. It literally closed on it, opened on it, tagged it, and left. I can't do anything with that. Is there another little sucker down there I'm missing? Am I missing these guys? Yes, I am. Look at that. So now I'm looking for model 4. This is model 3 right now going in. We're looking for an extension. Look at that. No close below. Ooh, right back up inside. Welcome to Rip Your Face Off. Michael told you. At least that's what people are telling me about his. He was talking about the other day on X. I think it was on X. This market is ripe for tearing you apart, and that's a right there. Rejection block. See how that closed there, went lower, extended its own little range here, and it hit the rejection block of this range, and then snapped right back and took your face off. There's right up to that premium box again. So box to box again. Not that you were trading that, but holy crap. 1 minute chart, eh? Look at 830 level on both ES and NQ. NQ's 830 level. It's got to be up here somewhere. A D's 830. Pretty close, Sadiq. Almost tagged you right there too, hey? You're just like a fraction low on that. Look at how close it was though, hey? Almost tagged you right there. If your stop or your entry was sitting right on that 391 level, right? The 391 level, how frustrating would that have been for that to come all the way up to, there's your high, 390. So literally one tick and said, nope, not taking you in, and left. That would be frustrating. Look at all the times it says, I'm going to tease you, Hadi, but I'm not going to get you in and I'm going to leave. How frustrating would that be? Oh, man. Not quite hitting your 830, but dang, that you can't get any closer than that, Hadi. Like one tick. The 830, exactly. Following your advice works for me, bro. I'm glad it works for you, Derek. I'm glad it works, man. Nice high next, low. That's it. I'm just demoing now, but as a test, put a buy at the very rejection block at this and suffered some drawdown, but it did some that take it higher. Yeah, right at the rejection block, hey? That's like a turtle soup. I still haven't got bold enough to do turtle soups yet. I wouldn't do that with my money, but it was a fun rejection block trade. Yeah. See, even this demo account, I'm not even doing it with this demo account because I'm committed to try and get this to $1 million. Just trading it like a real live account. So I don't want to take unnecessary gambling in it. I still want to treat it like it's a real live account. So I'm still going to wait for perfect entries in here. Let's go through here, see what's going on. Back into that range. That's all tight and choppy. Eesh. Crude, choppy. I can see where Michael looks at this and goes, this is just super shit. So look at that. See how we traded back into that discount box and we said we wanted to see it go higher into this area? Done. There's soybean run today. Right off the discount, box to box. How beautiful. Look at that. We ran above here. We said if we take out the mean threshold of that candle, look for a retest of this. It takes it out right here. And then you go retest. Bang. Right into that level. Nice soybean trade. And that's 4-hour chart too. So that would be a huge play in your money. Huge return. Sugar. Looking for a run lower off of here. We traded back into it. We traded below it right here. Trade back into it right there. Short. Take out the low. Pay yourself. Look for 50%. Internal range liquidity hunt. Take profit model 1. Done and done. Box to box. If you do take profit model 2, box to box, you're looking for a run down into here. That's the downside we're looking for in sugar. Live cattle, we're looking for live cattle to go. Where do we want live cattle to go? Oh yeah, that was the switch up we didn't like seeing, right? Then it ran up above the high. It came back into the mean threshold of the bull trap right here, hit it, then quickly rejected off of that. So that's a continuation model. This was these kind of crappy candles, but if you're looking for this as a continuation, that's a perfect little no-go line right there. Stop loss would be sitting down here. As soon as it breaks that high, move to profitability, pay yourself, and let the rest run. Targeting this 246 above you. That's commodities, man. That's commodities. Gold. I want to see gold break through this breaker here that takes out this high. I want to see it trade. We're already digging back into this level and we've already wicked through it into the rejection block. Now I want to see us really blow through that level. Come back, use this as support, and then we start to run back inside this larger range here. A box-to-box trade. You got nothing here. Literally opened on it. No, that one opened above it. Jeepers, that was so close. Look at this. This is the reversal. They're so freaking tight and crazy this morning. Right there. See that? We open above it. We come back inside it. Look at that wick. That wick did some shit damage there, man. Comes back in. You find support inside the SIBI. Trades through it and then sends it higher. Internal range liquidity. So you're going from box to box. If you're doing a take profit model 2, your next upside objective would be right here. And that puts you right inside the breaker here too. Don't forget you got a bull trap sitting right there as well. So if you don't get that, watch this guy here. Pay yourself. And if you're using take profit model 1, again, you see the benefits of this. You enter in here, you're running up, hit 50%, move your stop loss to break even, pay yourself. It hits 62%, pay yourself. Hasn't hit 70 yet, now you're sitting at 50%. And you've taken off 60% of your trade already. And you got 40% left to run, and it's sitting in profit here at 50. So if it comes down and tags you out, 62% is the reversal, and come lower. And you would have internal range liquidity on, you protected yourself and you saved yourself. Now if that suddenly starts to accelerate higher, you're gonna be like, ooh, my stop loss is sitting right there. I've paid myself at 60, now I want to see it hit 70. And I can move to 62. And then either 79 or 75, depends on which one you want to use. I like 75 because it's like taking that whole section into quarters. So watch real careful here. Now there's 70%. Now you move to 60, you pay yourself there. So now you got 70% of your trade is off and you're sitting at 62% profit. Now if it reverses on you here, you'll be like giggling to yourself. Take profit model 1 is a great way to save your ass, and it's a great way to pay you internal range liquidity, and you scoop out between 50 and 70% of that range. So watch. That was our entry. Paid, and we're sitting right here at 65%, and you've paid yourself at 70. This is the next macro. See how the bodies respect that 70%? So if it comes back and tags you at 62, that trade is done. And if you lament, it goes higher and you lament not staying in, you're an idiot. You're sweating. You're not trading the plan. And that's the plan. Right there, you're out. So you've maximized 70% of that trade. You're not an idiot. Sorry, I didn't mean you're an idiot. You're not an idiot. You're just not trading the plan. I'm just showing you a plan, not the only plan, but it's the safest way I can think of that would protect your money. If this turns against you now, you milked out all the liquidity you could get out of that, even on the turn. And you'll see, if this rips down here now, you'll go, holy crap, man, that model works so well in maximizing your profits. And even if you're on the wrong side of the market, it still gives you an opportunity to take some money out of the market. I'm on the wrong side. You get back in sync with it. Once it breaks down below here, you get back in sync for a continuation model. Does that make sense? I hope it makes sense to you guys. I apologize. I don't mean you're idiots. You're not idiots. You're smart people. You're all trying to do the best you can in here. So anyway, that's what I see there. Now, if it starts to run higher here now, I don't worry about it till it breaks here. If you're doing your take profit model 2, though, you won't worry about this. You just, your profit now, once you get over 50%, you move to break even. So you're just waiting for this trade to pan out. So if it comes all the way back here and then finally runs up and hits it, that's fine. Take profit model 2 is just your way of trying to give it some room to get up here. So you're not worried about all these internal range liquidity hunting. You're just trying to go from box to box trade. So you have to be a little more bold and give it some more legs to do that. So there's your take profit model 1 completed. Take profit model 2 now is looking for that box right here. And make sure 80% of your trade is off inside that box. So 70, 80, and leave the rest to run if you want. And if it comes back and takes you out, you go, that's okay. I got a portion of my trade off here at 50%, and I'm at break even, and I've got 80% of my trade is still on, running for here. So it hasn't cost me anything, and I'm just trying to do an internal range liquidity hunt. Or sorry, a box-to-box run, that's all. And if you're into take profit model 3, take profit model 3 is you're staying into that even through this. You stay in it and you wait for your first reversal, which is entry model 1. I've designed them so that I actually dovetail, they overlap each other. So a take profit model 3 is actually the new entry model 1 for the run back into the range again. They overlap each other. I'm just demoing now. I wanted to do 50% of the last down close candle in the range. Buy it. It works more times than not. Stop below the minimum risk. I used the Michael suggested mark 1 hour high and low at 7 p.m. So far took out the low, but the high of the 6 candle hasn't been attacked yet on ES. Very choppy. I'm going to sit here in this one now and just see if this model pans out of box to box. So I've showed you take profit model 1. Now we're looking for take profit model 2. And even that, you're stress free right now and you're risking more. A reversal on you. So you're risking all the profits here to go, oh well, I try to take my trade. I got a small little portion off here, like 10%, 20% or whatever. And my stop loss is at break even plus the cost of the trade. So I've made coffee money and now I'm waiting for the big payout up here. Meanwhile, the take profit model 1 people are like 70%, man. I juiced that sucker right out of there. If that comes back against you, you can see the power of take profit model 1. Even if you just stay in that, you can make a career out of take profit model 1. And you won't catch the big runs, but you'll certainly catch the internal range of liquidity. You'll nibble your way to success. And those people who are just trying to do inside doubles and triples, box to box people. The bolder people are going to go take profit model 3. Right? Take profit model 4 is your standard deviation model. So we're just going to watch for this right here. So you get to see the pros and cons of each one of the models, right? I'll watch, see how this pans out here. You other guys in your NQ, look at that box to box. You have P1, there's just your premium, D1, D2, right to P1, wick through, right into the mean threshold, D1, just barely touching, not quite touching D2, but staying inside D1 right now. So it's box to box to box, consolidation, box to box works nice. How's our gold doing? Still waffling around here. Now you take profit model, 2 people are just going, I don't care what it does here. I'm not going to get caught up in this whole choppy mess. Me, I just go 2 or 3 candles and I'm out. It's chopping around too much. But if you're really solid take profit model 2, you just say, I'll let it run. If it comes back and takes me out, I'm okay with that. I got a small portion off at 50%. The lion's share of my trade is still sitting in to go long. So remember, you're just above your break-even point here. And aren't you take profit model 1 people are just giggling to yourself. Now you see this, you say, oh man. How delicious is that model? I tell you, it is the safest way to make yourself money. It's not the big Reggie Jacksons out there. It's not the big Grand Slam home runners. But I tell you, it's a home run for internal range liquidity hunting. If that's all you do is just trade that model all the time, look for the range, look for the entry, trade the internal range liquidity, and move to the sidelines. And wait for the next range. Over and over and over. And you can find ranges every hour. So you got consolidation now. Run back, tag the consolidation. Are you expecting this to roll over and come lower now? If we can get back through that little box there in this bull trap, look for continuation for this upside target. So now you're getting squeezed, right? You saw all that profit that is if you're take profit model 2, the ones are just laughing. They can say, well, if we come down and tag that again, I'll get long on that again. All the time we stay above that box. And if I just, so the ideal entry for another long would be right there. Because if you trade through it, come back to it and tag it, get out because you're on the wrong side of it. It's coming lower. There, you're out. Your take profit model 2 people, you're done. 70% optimum trade entry reversal. So you're out. Now the rest of you who want to go long again can go along there. Now your stop loss, now that it's broken the high there, I put my stop loss right on break even and let it run higher again. This is what I used to do buffering. You catch this long, take out your internal range liquidity using take profit model 1. And now you use take profit model 1 all over again. Let it repeat itself. So you're right at break even plus the cost of the trade. So this is a zero stress trade right now. And if it comes down, takes you out, then move to the sidelines and wait. Wait for something cleaner. You want to see it break this bull trap here. Suddenly my voice has changed. So just keep your eye on that level right there. That mean threshold. Now that you traded through it on the downside, its mean threshold becomes potential support level to drive lower. And the fact that you're revisiting it, not interested. I'd be out right there. So you say, okay, I tried to go long again, didn't work, paid for the trade, no stress. Now you wait. Now you've exhausted your options for another run higher. Until you break through here or break through this bull trap, not interested, because the small range that you're in now is not worth trading. You traded that a D. Holy smokes. Okay, so you traded off of here, right? You traded off of here. As soon as it took the low, pay yourself. Or you're trading off of the discount box and looking for a range extension. There's your range extension. Now continuation. You're out. Oh, you could have stayed in that a D. That was a nice little continuation there. Let her buck now. I'd like to see it come back and just tag this 108 now. Nothing clean, man. Nothing clean. $130, $134. Oh, yes. I retested this low. 134, 137, right there. What did we say that was? Y'all remember? It's the daily mean threshold. We're trading through it, come back to it, and tag it and send it lower. That's what I want to see. I don't want to see a reverse now. I want to see it drive. I want to see it go down from here. No more revisiting. Let's go. Just come back, give us a little pop in here. And you can layer in, I'm going to layer in some buys here. There's institutional order flow. You may not get this retest here. That may be all you get. Again, don't chase it if it's not your setup. That's an ideal one right there. See how we got this SIBI? You trade through it, and then you trade back through the other side of it. Becomes the no-go zone. Already inside a no-go zone. Trade back up inside it right there. Doof. Drop down below it. We get below this candle. You retest it right there. That's a short. Right off that candle. Go lower. And now you move your stop loss to break even and wait. And just let it run now. You've got to be super nimble on that though. Right there on that low. And this is shaping up to be the next bull trap, right? So you want to see this drop down and create a fair value gap in here. I want to see this come back in here one more time and give us a little kiss off of here. I'm actually going to put a sell order there. And a sell order there. The stop loss will go right above here. Look at that. It's not taking me in yet, though. Watch that not take me in now. How's that for precision, hey? And it was the spread that kept me out. See, that's when you got too much precision in your trading. We may still get it yet. I still want to see 50% of that wick or the body there. That'd be nice. If that leaves from there, that'll be one of those little smiley days you go, well, it did hit perfection. Sometimes you can be too perfect. You took a long at 10:30. So ask yourself, Pablo, at 10:30, consequent encroachment of the wick of this. You took a long there? Nice. And you didn't pay yourself at the premium, internal range liquidity, and now it's reversed on you, and now you're underwater. So you've got to see that we're in tight range here, Pablo. If you're trying to hit those home runs, you miss all the key levels, like the key levels inside this range. You know, once they get broken, find support, send it higher, hit the premium box, reject off of that. Your first indication should say, I don't want to see more than half this candle get taken out. It does, comes back, uses that half to go lower. You don't want to see this get closed out here. It does. It closes below you here, comes back inside this. Sends it, there's lots of warning in here, my friend, that tells you that you're getting squeezed. You wanted to see it break through the bull trap here. After it ran through here, you want to see that bull trap get taken. It didn't. It just wicked up into the premium box. And that bull trap never gave up. That should be your lots of key signs in there, warning signs telling you that you're going to get squeezed there. Sorry about that, man. Sorry you didn't. It's a good thing. Like, screen capture that and do a journal entry on that, Pablo, just so it's clean inside your head. What you should be looking for, what you're reaching for. Where was my psychology? Was I on a higher time frame? Was it not being supported? It wasn't being supported on the lower time frames. It's a great one to make notes on. That's funny. It literally came and tagged it. That must have literally, what's my thing is 107.25. What's the high on this candle? The high is 107.50 and the spread is 50. So it was 0.25. The spread, I was 0.25 from getting clicked in there. I love it. That's good. That's a serious precision there, right? You did take profit. I'm glad to hear it, man. I'm glad you took some money off of that. But, you know, stay in the price action, stay on the horse there. And watch for levels. Let me put it to you this way, Pablo. If you're aiming for higher objectives, okay, make sure that your lower objectives are still supporting that high upside objective. If they don't support it and it starts to turn on you, you go, I have to bail on that because my lower time frame's telling me, no, I'm turning and we're reversing back. Now, did it hit a key level up higher or lower? That I'm looking for a retest and then a reject off there, and I'm seeing the rejection occur. So keep an eye on all these key points. So what we're looking at on 1 minute, you're always scanning for that. On the 15 minute, you'll hear Pub or Hadi say, hey, Darren, look at the 15 minute or look at the hour chart. He's constantly cross-referencing where price is it being supported? If I'm looking for this higher time frame objective, is it being supported on the lower time frames? And if they're not, they give up, then I give up on the higher one, I give up on the 15, I give up on the 5, and the 1 minute is just saying, no, I'm going lower and lower and lower. So that's how you kind of just track your progress if you overreached. Like here's your big ass bull trap on a 15-minute chart. You got to get right through that. If you want to go bullish again, you got to get up here, which is literally above this. You got all these different go, no go zones to get through now. So maybe we'll get one more little run up into here and we'll load ourselves in. Now, I do not want to see this bull trap aggressively get taken here because now we're sitting at 10 o'clock reversal, right? So we could see a run on this whole section here. And that's, if it is, then I have to do this. And say, what am I paying for here? Am I paying for a premium? I'm paying for a discount. Oh, I'm going to get this one out of here. Oh, shit. It took me in. This is the one I want. I want a higher premium one. Look at that. I didn't want a discount one anymore because we're in a larger range. I'm paying a discount for it to potentially run up into here. There, now it's finally in. All right, so now I don't want to see, I want to see a tag on our little go, no go zone here. And I don't want, my stop loss is going to sit right up here. So I've got a premium and I've got a bull trap I want to see hold price back. I've got a no-go zone that I want to see it reject off of there and send it lower. And now I'm going to look for this guy here. As soon as I tag that high, I'm going to move to break even. Because if it just tags this and sends it higher, I've got, see how we've traded through this level here already? So I have to move my stop loss right. Yeah, I don't want to see it coming any higher than that. I'm going to sit right there. It's got to run down. I don't even want to see it come up any higher than that now. Demand, that's what you want out of your price, man. You go down, otherwise you just give me 60 bucks. Give me a kiss on the nose. Take me to the prom. Let's go. Now I want to see that take out that low right there. And I don't want to see it go above there. So I'm just looking for this here. I'm just kind of protecting my ass because that's the level I want to see get hit. So now I don't want to see any more runs back up. I just want to see this drive down now. So I'm at a break even plus the cost of my trade. And I think that gives me back some of my, a little bit of some of my losses this morning. I think overall I'm still up. Am I not? 4 starts here. So 3, 9. Oh yeah, we're way up still. We're still up for the day. There's the tag on the low. So you see how this is potential run up? See, that's what we're looking for right there. Kick off of there. And if this is sending it higher, then I'm not interested in participating in that. Hourly. Consequent encroachment. I'm still looking at that consequent encroachment of the daily here. That's the daily re-kick off of there that I was looking for, right? That 43. That's the reversal on the daily I've been looking for on the hourly. So we got to trade below it though, close it out on an hour and come back into that. Oh, she's... What do you see in there? Had the obviously a retest of this old low right here at 179. We haven't quite hit it yet. 184. So you're looking for it to come back up into here and just kind of poke into here and then roll over and come down. Is that what you're looking for? Because you can still see a full run back up into here. Its body. So that wick is important role now. See how we've traded below it? I want to see it come back into the bottom half of it. So 25%. Just take this and break it up into quarters and have a look at 25, 50, and 75% of that wick. Nice. That was the freaking turn point there. Let's wait and see. Wait and see. And we're getting into lunch hour too now. See how we're through that level? Come back, give it a little tap. Or wait for structure shift. And wait for this to get retested. Stop loss will sit here. This will be your bull trap. Wait for it to finish. 6 a.m. candle from the 21st. Oh yeah, abs is 6 a.m. candle right there. Right in it. Shit, I gotta pull those over tighter. Standby. I gotta pull that tighter. Oops. Let's see if I can get a label offset around 20 or 10. I keep missing them on the sidelines here because the old ones don't show up. Only the fresh new ones will go to the end of the day. I could say, I could do this. Well, that's the midnight open. Jesus, I'm looking at the wrong one here. This is the one I want. I can say extend to the week. I can say extend to the month, and then they should appear. Yeah, there they are. They'll all send right out to the edge there, so you can see how they all kind of overlap. It just gets super chopped, super messy if I do that. So this is obviously from a few weeks ago. But right over it, see how it overlaps right on that key level? Like if I extend this again, watch how these overlap are go, no go zones. And they line up with ABS's 6 a.m. candle. Where is it? Show box. Where the heck is my extend? Oh yeah, for the month. See how it overlaps? Our no-go zones. Look at that. Right in ABS's 6 a.m. candle. And it's right inside the go, no-go zone. Right off the consequent encroachment of the 6 out. Are they key levels? Do they support price? Dang, man. Does they ever? We're trying to show them, Abs. We're trying to tell them, man. I keep hitting this freaking midnight candle. It's this guy right here. And I was going to change my offset, wasn't I? 30. Let's go to 20. There we go. A little cleaner. I might have to do 10. Let's do 10. Do my offset to 10. That should pull it in tighter. There you go. Now we get a bit more of our chart. That'll kind of give us our, hey, guess what? That's a 6 a.m. candle. Could have stayed in that then. We'll convert them eventually, abs. Send it down now. I just wanted to see it get back in here earlier, and it did. But damn, I missed it. And I was calling for that earlier too. And oh man. Look at that rejection right off of that. Pull back right into that no-go zone. Tagged it. Left. Egads. And then we closed below here. Traded back into it. Went lower. So now I'm looking for a retest of this candle. It hit it. Now you're looking for it to go lower. That would be a short there. I'm going to build you out a bot for that, abs. I'm going to build you out an AI for that. I got some ideas for that 6 o'clock run. See how it's coming back through it now? It's too close to lunch hour for me. That candle's not acting the way I want it to act. You want to see no more than the mean threshold of this little down close candle here, and we popped through it. So you want to see it start leaving from there. The fact that it starts to eat back into this premium range again, you have to wait. If you've got your stop loss on this going shorter, you have to be above here, which is your bull trap, which tells you if you close through here and take the bull trap, then you're running higher. You're on the wrong side of it. And we have a change in direction during lunch hour. So it'd be kind of neat to see this close on the hour in 35 minutes down in here. And then the next hour to trade back into that consequent encroachment again at 140 into this one more time and then send it lower. You can even come back into the mean threshold of that candle, which is right there, and then go lower. I'm all right with that too. You see on the hourly here, that comes back and gives you institutional order flow entry drill on the hourly and then sends it lower and leaves that open. That's the consolidation, fair value gap, fair value gap, institutional order flow, keep going lower. You have no institutional order flows in any of those. So the next one is the one you want to see it on and send it lower. So that has to close down below the consequent encroachment of this. And then I want to see 12 o'clock, just come up here and clear that high out. So I'm looking in this zone here for 12 o'clock lunchtime. Make that high at lunch, look for a reversal, and then look for this to continue going lower. That's higher time frame, along with clearing out some liquidity here, back into this bull trap. We could, no, you don't even want to see it run up there. That's way too high. Just inside here. That's all you want. Is that abs's indicator available? This one I built here, no, it's sitting in my favorites here. I think it was in my scripts. Yeah, 6 a.m. abs candle. Didn't put an author's name in there. 6 a.m. and 6 a.m. I got two of them here. I got a 9:30. You see, I've been spending a lot of time building bots and stuff. They're some crazy ass levels. And then you look at my scripts. That's all my the bots I'm working on, or indicators I'm working on anyway. I'm not selling his idea. I think what I want to do is I want to build a bot around his 8:30 on a sell model, a sell bot, not just an indicator showing you that it's the 6 a.m. I want to build something for you, abs, and then I'll give it to you. And if it makes you some money, then that'll make me happy. But you're in a list of a bunch of bots I want to build. They're not easy, let me tell you, even using AI. See you later, abs. Take care, buddy. Watch this level here now. If you like what we're doing, hit the like button, subscribe. It all helps. We appreciate your time. We're here for you every day, and nobody's selling you anything. We're just trying to share what we know. The community, if you join the community, it's the same thing. People are in there trying to help you out. They're trying to do their best. So as long as you're respecting each other and respect everybody's process, you'll do well. Stay in the community, learn. There's lots of people in there willing to share their stuff with you. We don't have a bunch of hoarders in there that they don't care. They just want to take. They'll share whatever they can. And that's it. That's the kind of community we want. Everybody moves forward, man. Your success is based on helping other people move forward as well. So there's the trade above right here. Trade back into the mean threshold. I don't want to see that mean threshold get broken now, and I want to see that go higher. And we're targeting this guy here. Hey D, enjoyed it this morning. Take care. Thanks, Derek. It's always good to have you, man. As soon as it takes that high, pay yourself. Move to break even now. You don't want to see that come back down and revisit this, and you paid yourself at the next high. So it's a zero stress trade. I'm trying to get you into a zero stress environment, right? Now you say, well, that's too close. Your stop loss can get taken out. Well, then you know that that's failed and you're coming back into this range. It's the fail safe is what I'm trading off of now. So you've got a bit in your pocket, you're at break even, and we're waiting for that to reach into this thing. If it doesn't give us what we want, then we're out of our trade and we're like, oh, I'll make coffee money. Right there, it just tagged you out. Because that's the fail safe. If it breaks through that on the downside, we're getting a retest of this one. And see how it's broken through that mean threshold? It's retesting this down here. So if you want to get back in right there at 0.89. Because if it closes below that, it's a fail safe. Your stop loss is sitting right here. And it's really tight. If it fails there and goes through it, then you're on the wrong side of it. Get back in, close your trade off. It's coming shorter. And you're in that welcome to consolidation stuff here. See how that premium has already formed inside this range? We've closed below it now. We're inside this one. So you're between here now and here, inside that range. Pull 50% of that and look for the key levels in here. Lots of equal highs above you. You're inside this. What are we sitting at here? Oh, 50%. So you're just below 50% is here. So that SIBI is still sitting in the premium. Literally right on the bottom of the SIBI is the 50%. Get a body through here. We don't have a body through there yet. So we can see a retest of this up high, then go lower. Or we're just going to keep running right down into it would have to be this candle because that's all in the premium still. So unless we just tag that right on the bottom and then go higher, I'd be looking for this candle right here. So consolidation, you've got two different stories you can play. One, retest this. And then you want to see, does it go higher for the next price leg up when we break through here? Or is it just going to tag that, roll over, and we're going to start attacking this 50% again and just drop into the discount, which means this is the candle for me, what I'm looking for. I have a feeling, and you know feelings, that we are going to have some smooth highs going into Friday's NFP. Yeah, this is the time where you finish your trade for the rest of the week and wait for NFP to be over, and then I look for a glass off in the afternoon on Friday. Look for a glass off there, which is that smooth. If you've ever done any hang gliding and flying, we look for the glass off, which is a smooth price action. It's just nice and slow and steady. There's none of this jumping back and forth, and that's usually in the afternoon on a Friday. So watch this 50%. Bing, just got hit. That's the middle of the range now. Now, how do we act here? Do we run down to high open mean threshold? Or do we now start to reverse and start setting that back up through the premium? So just watch how it's acting inside this range here. So look for the next level, which is right there and there. That's 7.3 right there. We're through that. Now 3 in a row, your ass is next. And we just got 1 and 2. So send it higher. That's 70% ultimate trade entry reversal. If it goes through the third one, which is down here, that's a full fill of your busy now. And your line in the sand is the mean threshold of this candle. Right. Is that it right there? Oops. Let me just see where that one is. Yeah, it's definitely in there now. No, it's not. There it is. That's the mean threshold. So now let's see if that holds there or we start to close through it. I'm starting to work through it, so look for a run on the lows now. This looks like it's going to chop. You might get a little wick through here and then chop back into this range because we have not hit this stuff up here yet. We haven't hit here, we haven't hit there, we haven't hit this, and now we're just finally closing below here or on that. What's the low? Yeah, we closed below that, so we're hitting here, here, and here. Those are all primary targets for this to run back into here now and chop around. Chop around. Jump up, and go down. So this is a go, like a go, no go zone now. You trade through it on a close, and it's just barely off the close there. You want to see continuation anywhere inside here or inside this range. You want to see this bull trap get taken to the upside, clean out the premium, and then run for these equal highs. A rinse and repeat all over again. So right now you still want to see bearishness, and you want to see it take out these lows. Just because we traded below that right there, that little tip below, run back into it. Now send it through the mean threshold. Look for a rejection block. That's what you'd pay yourself. And then look for the lows. Gotta go. See you later, Hadi. Have a great day, all. It's Leon, honey. That Leon, you're going to be good friends with Derek. You got honey in your name. He's all sweet on people like that. Anybody's got B in their last name or honey, he's just like, hey, who are you? Let's be friends. There's something about you I just love. It's so sweet. So there's the rejection block right there. So it's a really, really tight little short. That's a model 3. Continue the extension. There's your extension right below the low. Now I want to see it close below here and then use this candle. And see how it's not closing there yet? They just took the low and the rejection block. Little tiny thing right there inside this one. So it's creating these, engineering these liquidity above and below. See it? There's stuff here. There's stuff here. Now I want to see it take this candle out on the upside and come back into this range. And we're targeting this up here. Or this first one, second one. If it doesn't take that out, we're still looking for it to continue going lower. And I'm looking for this candle to get closed below. And then that candle becomes our support candle. Is my best buddy. Not sure where he or she is from, but any honey dude, dude, that is a friend of mine. I knew it. Knew it. There was something about the name. There was something in the name that I thought Derek's going to be drawn to. Like a bee to a flower. Still no close below here. We've got wicks on it. Is that close there? What's the low on that candle? 47.50, 47.75, and the close is 46.75. So it's actually one tick below the low. So now I want to see this hold price and send it lower. Sad news today. Looks like I may lose one of my 2 hives. Oh no. This week seems to be succumbing to the cold. Didn't have enough population to make it through the winter. Oh no, Derek, you need to bring them in and your house and just leave them in the warm there. Derek, that's not good, man. All those little people dying, struggling to live there. Damn, a whole hive. Oh. I tell you, got to make little bee blankets and everything. You got to have you got to sing to them, keep them warm in the wintertime, have a heated place they can stay in. Damn, man. That's a shame. So there's our continuation. That's what we wanted to see. Nice. Send her down. I'm regretting not staying in my original idea here now. Right there. Oh, well. Still calling it. We're still hitting it. There's their trade below. Look for a retest. Nice. Send it lower. Stop loss now goes back up above here, and you're in a stress-free trade. Does anybody take that? Did anybody take it? And let it run now. I want to see that just rip through here on lunch hour. Don't even bother come back. Just send it through. Send it through. So again, now you're looking at this as it's forming, right? Watch how this is forming. So you're saying, there's my new bull trap. I don't want to get broken to the upside. I'm getting a fair value gap forming here. So there's the potential for a reversal here, right? So if you're using take profit model 3, you wait and see if this gets closed through. If it gets closed through, whatever short you're in, take profit model 3 says I'm out, because it's also the new model for entry model 1. 3 to 3 to 3, says Mark. Well done, man. I should have stayed in your trade this morning. It was way up here. I think it was right here. Yeah. No, it wasn't. It was way before that. Look at ABS's 6 o'clock here. That's today's 6 o'clock. Trade through it. Came back to it. And we never came back again. We said goodbye. Bye-bye. ABS gave you an opportunity way up there to get in for a short. Well done, Mark. No, it's coming down here, Derek. Remember that 24,600 I've been calling for a long time? I think we're going to get it now. If this doesn't go all wiki and crap on us, I'd love to see this dive right down into that 2600 or 24,600 level. So that's another 400 handles to go. You heard it here, folks. You heard it here. Let her buck now. For more bullets in the Middle East and a few more bullets in the Middle East, and it may go down to that imbalance you mentioned. Yep. I don't think you need any more bullets, man. I would be surprised if it took a run down there this morning. In the next little while, we start seeing some big bull rips down there now. But that retest of that consequent encroachment on the daily right here, overlapping 6 a.m. You want to talk about confluences, right? When we saw it run through here and you say, I want to see it come back and tag that. Look at the confluences. ABS's 6 a.m. candle, our go, no go zone. Look at how that just deliciously hits it. And even ABS's old 6 a.m. again in another no-go zone. No-go zone sits right on ABS's 6 a.m. no-go zone. I tell you, man, that all overlaps. And look at ABS's 6 a.m. off of another no-go zone. And Mark's Mark 3 overlap. Where's your next Mark 3, Mark? I'm trying to find Mark's next. There isn't one. Wait, you'd have to take that from months ago. Below you, Mark, there's another Mark 3 in here. You'd have to go back to December to find it. Let me have a look. Let me add Mark's no-go zone. And let's do that monthly. Let's do a history of 8. And let's do week, 8 weeks. It won't let me do it. I'll have to get AI to fix that. It won't let me go back 8 weeks. Okay. I must have set a hard level on there. I have to go in and check the code on that. It only lets me go back 4 weeks. So what have you got for yours, Mark? 24,900. Yeah, you're you're about to hit it again, man. I'm happy with equal lows at 24,848. Thanks for today, Darren. See you all tomorrow. See you later, Hans. Take care, buddy. We'll see you tomorrow. 24,900. You got time after right now, Mark? Or you want to wait till you get to your 29 or 24.9? I'm going to go in to fix that candle there too. I'm going to fix this AI here to go to the, I'm going to extend that 4 weeks. It won't let me go past 4 weeks. So I'm going to extend that. November 25th. Yes, yes. I'm trying to get a 12. I'll do a 12-week look back. Do you guys see that at the bottom of the screen on the left-hand side or right-hand side there? No games, no ghosting, just an AI. It's a realistic AI girlfriend. What's that crap? Wow. They're selling desperation. Let's not even talk to humans anymore. Let's just pretend. Let's just stimulate your visual cortex. That's all you need. What's this world coming to, man? So you just want to wait for it to get to your 900? Let's get a hell yeah candle. $24,935 is the top. Let's put it up there then. $24,935. Right there. That's all you need, man. It's just the top, consequent encroachment, and the bottom. Yay! Raise the roof, man! All right, now let's see if we can get to 2,900. That's awesome. You're in there, man. We'll duplicate that. Clone Rebellion. 935, 25. Way to go, Mark. I tell you, there's 19 people out there right now, Mark, going, holy crap. Oh, no, 18 people. One person left. I don't believe it. I don't believe it. Now watch, see if we get above that bull trap. There's a small little turn there, right at the bottom, right at his the top of his 3 a.m. candle. So if you get a bounce off of that, remember we have, this was the little drop below. There's your range extension rule right there. Or sorry, continuation is right there on the money. That's continuation. Target. Body trades above that, 30 seconds, next 15 seconds or so. Wait for a body to get above this little high here and look at this bull trap. 5 seconds, 4, 3, 2, 1. There, we're above it. Now I want to see if we can get a little tap off of that right there, and I'll start sending it higher. If we lose the mean threshold, look for a retest on this. Boom. Done. Okay, so now we've got a full fill of the SIBI. Now if we close below there, we didn't get a body above here, but we got a body above that bull trap. The first bull trap is right here. So we'll see if this SIBI holds now. Good, we're above here. Now watch this candle, how it's acting here now. Right there. Leave from there. And I'm right in the middle of this candle. Tap and go. Start driving higher. See that right there on that midpoint of that little first little bull trap there. Get on above there and let's get some body above this high in this order block. This has been activated now. So I want to see this bull or this candle act like a propulsion candle and propel price higher. Like a magnet, a reverse polar magnet. Got to get a body above here though. 2 seconds, 1 second, done. Come back, give it a kiss, and send it higher. Look at that, right off that level. Delicious. So you hit a level on the higher time frame you're looking for, and here's your reversal. We've called out the reverse as it's happening, and now we're inside this range. And now your stop losses move to break even, plus the cost of the trade, and you're doing internal range liquidity hunt. You're back to your take profit model 1. Take it from here to here, like that. As soon as it hits 50%, move your stop loss to, you know, it's already at break even, but take half your trade off there. And let her buck. Oh, they'll see it, Mark. Wait till we get our little bot made. They'll see it. We'll have the bot flagging entry old off of an old. It'll tell you. I got ideas here, man. We'll find ways to get the bot to trigger long labels. It'll say short here in this zone. It will lay out the zone. Short in here, breaks here, violation, fail. And it'll be monitored on a 15-minute chart. We'll have it all set up here. I got me some ideas, man. So if we took the first swing, which is right here, we're already over 50%. If you're taking the one that contains the BISI in it, it's there, which is typically the one I like to see. I like to go from SIBI to BISI as the range. But you can technically take the first swing point. That's not quite there yet. Right there. So watch the 50. As soon as you get 50%, take half your trade off your internal range liquidity hunt. Remember I told you every hour you get to see a new liquidity hunt? We showed you one back there. This is the new one. We called it right as it's happening. And that's where you're targeting right there. And then 62%. And then you just move to the sidelines. If it rips back against you, you'll giggle to yourself again, like we did up here at that 70%, and it came back against everyone. If you're doing a take profit model 2, there's your entry. As soon as it hits 50%, go to break even, plus take 20% of your trade off here, and let the rest of the trade run for your first premium here. So P1, there's a P2 there, and there's a P3 above you. Yes, sir. The AI is of a beautiful things I have seen this past year has been amazing. I've been able to use several things from several people I look up to in trading. Just want to show some appreciation. I'm glad to hear it, Liquid. Dee and Hadi have been amazing teachers, and within the past year, I have finally crafted my own model. So this year is data collecting and harvesting. Good for you, Liquid. Good for you, man. I'm happy to hear it. I'm happy. If we can keep shifting one person at a time, I'll do it, man. I'm happy to see you all make money. I figure if it works for me and it works for you, then happiness is just a small part. There you go. There's 50%. You're done. Take half of your trade off there. You're moving your stop loss to break even now. We're just doing that internal range liquidity hunt, right? So that's really, really good. So you see that higher time frame objective was hit. Wait for reversal. We see it. First one, second one. Trades right back into the second one. Right there, we were calling it. Want to see it go higher right there. It does. Takes out the high. Move to break even. Pay yourself at that high. Or if you're looking for take profit model 2, you're in. You take 20% of your trade off. Move to break even. And now I'm looking for 62%. That's your take profit, or your take profit model 2. You pay yourself right there. You can take 80% of your trade off, 90% of your trade off, and then try to let it run for the rest. Then you can get back into your other models to continue. You can quite easily turn a take profit model 1 or a entry model 1, entry model 2 into an entry model 3 and an entry model 4. If you just use those 4, you cover everything from a reversal to internal range liquidity to an extension to a continuation. That's what the whole 4 models are based on. They should be able to catch you in all of this. You can either use all 4 of them or just use one and make a living off of it. Get ready for the course. I'm going to build a course just off those 4. I'm not going to reinvent ICT. I'm just going to use the techniques he's taught us and I'm going to combine them with my 4 trade models, and that'll be my course. This is honestly the only community that I am still in from the last year for several reasons, obvious reasons. Love it here, and when you are in this alone, it's an awesome place to call home. Thanks, guys. You're very welcome, Liquid. Thank you for the compliment. It was very sweet of you. Thank you, thank you, thank you. I do appreciate that, and as do the guys in the community. And I know Hadi appreciates it. He shares the same view I do, and he's by far my best student for picking up on the technique. And he loves box to box. He was sold on it when he saw the logic of it. He was sold on it, and he's become quite successful in it. So I'm happy to see that, and it's nice to see you guys are picking up on it. And that's the whole purpose of the show, just to kind of teach you something new and show it to you over and over again. I'm not showing you a million different things. I'm not trying to teach you hundreds of different ways of looking at the market. I'm showing you 4 models every day, consistently, every day, over and over and over again. And you'll see me take losses when the market's not acting the way I want it to. It can beat me up, and you've seen it. But I want to consistently, it's like this account, I want to see this get out to $1 million, and I just want to try and trade it like it's a live account, and not just like some people who throw, 100 handles on there and say, I made $1 million. Yeah, whatever. Consistency. And you'll see that if I change the account, you'll see right here, if I blow it one day and go back and put 372,944, you'll see realized profit will be 0, right? And you'll see I've done hundreds and hundreds of trades since I started in December 12th was my first day trading that. So I want to try and trade that like a regular account and just trade it up using this as consistently as I can. Then you knock off the zeros and say, if you're starting with $100 account, you start off with a $1,000 account. Just knock off the zeros that you see on there. Instead of it being 100,000, imagine it being a $1,000 account. So knock off 4 zeros. 3 zeros. So 62%, take profit model 1, people. You're sitting right there at 50 now. If it comes back and tags you out, you're out. You're done. It's sitting right there. Just coming back to kiss you on the nose, either send you higher, and you can sit just below that 50% of this thing. That's your candle's been activated. Just below that consequent encroachment of that, or mean threshold of that wick. See, you want to keep going higher. You're still in, man. You're still in. Aiming for 70 now. And keep in mind, you're in your bull trap. So have you paid yourself there? Are you taking in that? Is that part of one of your rules? Instead of just trading the data points here, is this an important level for you? And it's 1, 2, 3 levels that you're looking for it to potentially trade off of. So its first level is the 62%. Then it's second and third. Those are 3 data points in there before you hit the 70. But if it comes back and tags you out at 50, then you've got 60% of your trade is off already. And the other 40% is in big profit here. It's not about getting your trade. You only got 60% of your trade. You're still got 40% is in maximum profit here inside that range, right? So far you're still in, you're still long. You've got 40% of your trade still left on here. Unless you took 1% or 10% off there, then you've only got down to the last 30% left. Smart move, Lucas. Smart move, man. Bang, you're out. Done. Move to the sidelines. High five yourself. If that takes off now, stop worrying about it. wait for it to break here, then get back into your next target. You're going to be so happy you paid yourself at perfectly at 62%. If that comes back lower, you'll go like, oh man, how delicious is that? Now look at that. See that? This would be nice to see it come back all the way into that consequent encroachment, even 155 into these two right here, and then roll over and go lower. But there's your internal range liquidity hunt. Second one in 2 hours. And that's it for me. I'm done. I hope you guys enjoyed yourself today. I hope you enjoyed the show. Yes, sir. So much easier to pay yourself and let those couple of micros run. Just need to get better at holding them. It's just a matter of trusting, Lucas. If you're still staring at the dollars on the side there, that can really screw you up. Just trade the data points and trust them. Once you get into break free or risk free, then just focus on data points. Don't worry about looking at the money on the side there. Just go over into your thing here, this section, and turn that off. Put your stop loss in here, put your take profit up there, come in here, and then just go click and take the position off so that you don't see it. So you're not focused on it here, and you can focus on the data points. If it comes back and takes you out, it takes you out. And if you're desperate to close out your trade, just hit the buy or the sell, and that will close you out. Instead of going, oh my God, I got to go back in here. Where am I? Where's my stop loss? I have to move it. Just sell it. Anyway, that's the... Thank you, guys. I appreciate your time. I hope you enjoyed the show today. Thanks, Mark. If you want to get together, chat with me on the Telegram there, and we'll get together. We'll put our heads together and start working on an AI for your model, because I like it. And I want to put some time in there with you and help you out with that. Okay, so anyway, as usual, sending the love, my friends. Thank you for everything. Russell, see you later, man. I'll see you guys on Telegram. And like, thumbs up, tell your friends, come on in, let's help each other out here. Thanks for coming out, you guys. Right back at you. Love you guys. Thank you.